This is Nightly Business Report with Bill Griffith and Sue Herrera.
Hitting a triple, the Dow, NASDAQ, and S&P 500 all close as records as investors start the week in rally mode.
Abrupt departure. The CEO who led McDonald's turnaround and nearly doubled the stock price is fired, leading investors to ask, what's next?
Under investigation, Under Armour confirms a probe into its accounting practices, raising a lot of questions and offering few answers. Those stories and more tonight on Nightly Business Report for Monday, November 4th.
And we do bid you a good evening, everybody, and welcome. Nothing like a hat trick of records to start the week. The three major averages all closed at all-time highs today, thanks largely to reports of progress in the trade talks with China and increasing confidence in economic growth. So let's get right to the numbers for this day, with the Dow Industrial Average rising 114 points today to close at 27,462. The NASDAQ added 46. The S&P was up 11. Bob Pisani takes a closer look at what's driving the market higher.
Stocks broke new ground today on the back of higher hopes for a U.S.-China trade deal, with the Dow Jones Industrial Average finally joining the S&P 500 and the NASDAQ in the record high club. The S&P is in breakout mode, now on pace for its best year since 2013. It's up 23%, hitting historic highs several days in a row. So what are the factors fueling this surge? Well, first and foremost, we have trade optimism, which many believe will help the global earnings situation. Secondly, the Federal Reserve, which the market still believes stands ready to act if the economy worsens. But the fact is, we've already had slightly better economic data in the U.S., Europe, and in China recently. And that's causing some experts to say maybe we need to reevaluate the growth and earnings landscape in 2020 and raise the numbers a little bit. There have been some promising signs of rotation in the market, including breakouts among these cyclical stocks, tech, financials, and industrials, all hitting new highs. The Dow's rally comes despite a large drag from McDonald's following the firing of CEO Steve Easterbrook. But it's not just here in the U.S. We're seeing breakouts on a more global scale as well. Today, France, Germany, Italy, Ireland all hit new 52-week highs. Japan also 52-week highs. As for the month of November, well, it's usually the second best month for the stock market for the year, and it marks the start of what we call the best 6-month period, when the stock market historically has outperformed between now and the end of April. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
And when the market is at new highs, some say it's time to reevaluate investor appetite for risk. One way to do that is by looking at the recent performance of one-time stock darlings. Mike Santoli did just that and tells us what he found.
Some of the hottest upstart consumer technology companies have been trampled in the broad market's run to fresh record highs. A group of heavily hyped and fast-growing e-commerce players, including food delivery portal Grubhub, online furniture retailer Wayfair, and digital marketplace Etsy, have had their shares crushed, losing between 35% and 60% from their peak values. Now, while the recent bout of weakness here came in response to disappointing quarterly results for each company, the action does reflect a broader reckoning for businesses vying to revolutionize consumer behavior, but failing to prove that they can do so prosperously. None of the above companies has shown the sort of reliable, generous profit margins of pure technology businesses. Just because they operate through an app does not mean they enjoy software economics. They're saddled with the cost of real-world delivery and many well-financed competitors. Now, their challenges only underscore the vast advantages held by the likes of Amazon, with its massive scale and vast Prime subscriber base. The poor performance of the Uber and Lyft IPOs and the failure of WeWork even to come public also reflect investors' unwillingness to endorse Silicon Valley's growth at any cost philosophy. Now, the question now, does all this amount to an emerging crack in investor risk appetites? Or is the market's willingness to punish these aggressively valued one-time darlings a sign of underlying resilience in the broad market? The indexes at record highs imply that this selectivity is a strength, at least for now. For Nightly Business Report, I'm Mike Santoli.
As Bob Pisani mentioned a few minutes ago, the CEO of McDonald's is out. Steve Easterbrook, who is credited with leading the fast food giant's turnaround, was suddenly let go because he violated company policy. The stock fell on that news today, and now the company enters a new chapter with a new leader who faces some old challenges. Kate Rogers reports.
a major change at McDonald's. The company announcing late Sunday Steve Easterbrook is out as CEO after demonstrating, quote, poor judgment in having a consensual relationship with an employee. He's succeeded by McDonald's USA president Chris Kempczinski. Easterbrook is also off the company's board of directors. In a memo to employees, Easterbrook said in part, "This was a mistake. Given the values of the company, I agree with the board that it is time for me to move on. Beyond this, I hope you can respect my desire to maintain my privacy." Easterbrook took over in March of 2015, helping to reinvigorate the brand, introducing new value items and all-day breakfast. Most importantly, Easterbrook has incorporated technology into McDonald's with self-order kiosks, new high-tech drive-thrus, and modernized stores. The company has also made a string of tech acquisitions and investments this past year to build on this momentum. His replacement, Kempczinski, has been with McDonald's since 2015, brought in by Easterbrook and most recently running the U.S. business, working closely with franchisees. He's called Easterbrook a mentor.
In a lot of ways, Chris reminds me of Steve Easterbrook. I think he was one of Steve's co-authors when it came to the Velocity initiatives, been a big supporter of the technology and delivery initiatives the company's embarked on, and also key with the fresh beef rollout the company's been undergoing. So in a lot of ways, I think he was the obvious heir apparent to Steve.
But he faces a challenging environment in the fast food space. McDonald's recently reported disappointing earnings, and the chain is up against intense competition from players like Chipotle, Burger King, and others. A new development today, McDonald's confirming its chief people officer, David Fairhurst, has departed the company as well, effective immediately. McDonald's declined to comment further. For a Nightly Business Report, I'm Kate Rogers.
And one more PS. McDonald's said today that Easterbrook is eligible for 6 months of severance pay.
So what does it mean to you as a shareholder when a CEO makes a sudden departure? Eric Gordon joins us, a professor at the University of Michigan's Ross School of Business, to talk more about this. Good to see you again, Eric.
Hello, Sue.
Let's start first of all with what questions should an investor be asking about this situation when a CEO departs? What should they be thinking about?
So the first thing they should ask is, who is going to be the new CEO? Now, with McDonald's, we know they announced it right away, but you want to find out who that is. If there's an interim, you're going to be even more worried as an investor. Once you know who the CEO is, you want to find out, is this CEO going to make big changes? Is going to stay the course? How do you think about them? Because sort of the fate goes with the new CEO. So that's the first thing I would ask.
You know, it just seems lately there have been a whole slew of CEOs who have left their companies rather abruptly. What do you think is going on here?
You know, I think it's a tough time. The demands for performance on the job are high. And on top of that, the demands for your personal conduct are higher.
Right.
You know, we've shifted from, I think, a long era of wink, wink, nod, nod, well, it's personal, it doesn't affect the company, to, you know, pulling out the microscope and saying it does affect the company. The reputation is very important to investors, it's very important to customers. And I think there are a lot of CEOs who've been, you know, in whatever business they're in for a long time who haven't caught on.
Mm-hmm. Does it matter if it's a quote-unquote superstar CEO or one that has just been exacting change, perhaps in a more quiet way? Do the same parameters that you suggested apply?
You know, you hope they would, but you often wonder if the superstars, just like superstars in the NFL, get a different deal. Although we've seen a couple of them, you know, even the superstars have fallen. Easterbrook was very well respected. He did a very good job there. And I think the message from McDonald's is, even if you are a superstar, even if investors like you, you've got to act right.
Do we spend too much time on CEOs anyway, Eric? I mean, I don't want to minimize their contribution. It certainly can be great in many cases, but, you know, the CEOs of Intel and some other big technology giants have been changing hands. Now we've got Easterbrook at McDonald's, the largest fast food chain in the land. Are we spending too much time on their contribution, do you think?
Yeah, sometimes I think so. I mean, there are thousands of people who have to do the right things. There's usually a lot of executives near the top. The idea of the CEO as the hero, Of course, this partly justifies their pay, but this idea that they're the hero and boy, if they leave, we're in real trouble is, I think, about 2/3 myth.
On that note, Eric Gordon with the University of Michigan's Ross School of Business. Thanks, Eric.
My pleasure, Sue.
Well, McDonald's was not the only surprise for investors today. Under Armour this morning confirmed reports that it has been the subject of a federal probe into its accounting practices, one that has been going on for more than 2 years. The company also lowered its revenue guidance as well. The result was an 18% decline in that stock. Courtney Reagan has more.
News of investigations into Under Armour's accounting overshadowed the company's mixed quarterly results. The Wall Street Journal reported the Department of Justice and the SEC have been investigating the athletic brand's accounting practices as it pertains to how and when revenue is recognized and whether revenue was shifted from one quarter to another to make sales look better. On the earnings call, CFO David Bergman was the only executive that addressed the situation. He restated the company's position with similar language multiple times.
We can certainly appreciate, that you'd like us to provide more details regarding that matter. However, we are prohibited from doing so. That said, the most important message I think to convey is that we firmly believe that our past accounting practices and disclosures were entirely appropriate, and we've been fully cooperating for the past 2.5 years on this. So now we're focused on 2020 and beyond.
Who's prohibiting them and why? We want to know why we're finding out about it now and not a while ago. And, transparency is always a good thing.
Under Armour only publicly acknowledged the ongoing 2+ year investigations after the news broke.
It's hard to assess just over, one night what's happened, but it's quite a long time for this investigation to still be continuing.
Here's what we do know. Documents were first requested by the government in July of 2017. There were 3 different chief financial officers from 2016 to 2017, and Under Armour's meteoric sales growth began to decline in late 2016. Last month, Under Armour announced founder and CEO Kevin Plank would move to executive chairman and brand chief as chief operating officer, and President Patrick Frisk succeeds him as CEO January 1st. Frisk joined the company in July 2017, around the time the accounting investigation began. North American sales fell again in the quarter reported today, though some analysts are expressing concern about how to evaluate even the less than stellar numbers that have been provided.
I think it's difficult externally with their public reports to assess whether or not the numbers have been accounted for appropriately.
It's a very small board. Often these are founder-dominated board, like you see in Silicon Valley. Kevin's not stepping aside to January 1st. I think he needs to resign now.
The investigation's leading some to suggest it's time to clean house rather than "It's protect this house" slogan. For Nightly Business Report, I'm Courtney Reagan.
Still ahead, a trip to the Rust Belt to see what manufacturers and workers make of their changing industry.
We had one economic report of note today. New orders for U.S.-made goods fell more than expected in September. According to the Commerce Department, factory orders were down 0.6%. The report also showed that business spending was slightly weaker than initially thought.
The slowdown in manufacturing is due in part to slower global growth, and that's being felt by factory owners and workers in the Rust Belt. Kayla Tausche went to Pennsylvania, Ohio, and Wisconsin to get their perspective.
This graphite machine shop in Bethel Park, Pennsylvania is still humming and sawing, but it's quieter than it used to be.
What about the people who used to service these?
So they are not here working anymore.
How many were there?
We have over the about 6 people have been laid off totally.
That's 15% fewer workers at Amerisource Metals, which makes parts for industrial companies. A third of its machines are idled.
We would like to replace machines faster, which we are not doing.
That's partly due to $3 million in tariff costs, partly because customers are buying less. Founder AJ Goel says it's impacting his company and also the state at large.
A year back, that the manufacturing recessionary trends in this area started. Western Pennsylvania has lost a pretty big chunk of workforce.
That trend is emerging across the Rust Belt, a once blue corridor of heavy industry won over by President Trump's manufacturing-friendly message.
We've now gained nearly 10,000 new factories under my administration.
That early renaissance has started reversing in these politically critical swing states, which have lost 25,000 factory jobs this year. That's largely thanks to major multinational companies exposed to the slowdown overseas, and their weakness is spilling over. U.S. manufacturing activity declining for 3 straight months, with a sharper slowdown in the Midwest, where order backlogs are touching financial crisis-era levels. In Wisconsin, at Church Metal Spinning, welder Drew Savinsky's to-do list is getting shorter.
January and through May, this was completely full. Like, I couldn't even write anymore, but now it's toned down a little bit.
Church makes components for engines, plastic molds, and even playgrounds. President Mark Verheyen says he's still investing for the long haul.
I think there's still some optimism among people like me out there that it will be a blip.
But there is some impact now.
Our quarterly bonuses are lower than they were. People aren't necessarily getting 45, 50, 55 hours of work per week, so their overtime is down.
In Ohio, Timken is furloughing workers for 1 week every month.
They're not buying houses, they're not buying trucks, they're not buying new automobiles. They're looking at what the future is.
Bob Harper's lobbying lawmakers for the steelworkers he represents in Stark County, Ohio, where voters swung for Trump in 2016 after 3 elections backing Democrats. Harper says based on the economy, it may well swing back.
Everything he's promised to us is not there. You know, that's how he went after the Midwest, the Rust Belts, Ohio, Wisconsin, Michigan, and all that. It's not working.
The White House did not respond to a request for comment. The Trump re-election campaign pointed to the number of net new manufacturing jobs created in the U.S. since 2017, but did not address the recent decline in swing states. But the recent travel schedules of Mr. Trump and Vice President Mike Pence suggest outreach to voters in the Rust Belt remains imperative. For Nightly Business Report, I'm Kayla Tausche in Washington.
Now, manufacturing represents only about 12% of our economy, and that share continues to decline. And yet, it does dominate political conversations around the country and financial conversations on Wall Street. Why does it get all of this attention? Joining us tonight, Christopher Smart. He's Chief Global Strategist and Head of Barings Investment Institute. Christopher, good to see you. Thanks for joining us tonight.
Nice to be here.
What do you make of this conundrum? I mean, it gets a lot of the attention, but yet it is a much smaller share of our economic output than it was a generation ago.
Well, you're exactly right. It's been declining really since the end of World War II as a share of the U.S. workforce, and a lot of that is technology-driven and productivity improvements. I think it gets a lot of attention on Wall Street these days because there is so much attention right now on the U.S. consumer driving the U.S. economy, even as manufacturing, investment in manufacturing has been showing weakness. And so the real concern is if this continues, can the jobs picture still look so bright for much longer? The political story, of course, is because so much of manufacturing is concentrated in many cases in smaller towns. And so when there is a decline or a factory closing, the political impact is very concentrated, very painful, and very hard to reverse.
You also make the point that the manufacturing jobs tend to be better paid, and that, as a result, has a much broader spillover effect into the various communities that those plants are located in.
Well, it has a spillover effect throughout the economy, I think, because when you are making a car or a truck, you have a lot of inputs of steel and other components. You need a lot of electricity. That has great spillover effects throughout the economy. These are jobs that are also generally better paid than their comparable jobs in the services sector.
Right.
It's a very important part of our exports globally in the United States, and it drives innovation in many ways. So a manufacturing job isn't just the same as another job in another part of the economy.
And let's face it, many of the manufacturing jobs that Kayla was just pointing to are in swing states in this country. That might also answer why they get so much attention, right?
Well, I think that's right. But I think it's true that, generally, if you're an economist, you look at averages. If you're a politician, everything is local. And the local pain that comes from a factory closing down, as I said, is very real and very difficult to reverse. And that's something that is going to get attention.
Christopher Smart with Barings Investment Institute. Again, thanks for joining us tonight, Chris.
My pleasure.
Bausch Health posts higher revenue for the first time in 3 quarters. That's where we begin tonight's Market Focus. The drug maker formerly known as Valeant reported better than expected revenue, driven by strong growth in its Bausch & Lomb division, as well as increased demand in its Salix unit, which sells gastrointestinal treatments. The company also raised its full-year forecast. The shares were up about 1% to $26.19. Gannett saw its digital marketing services grow, but its overall sales at its publishing unit decline. As a result, the company missed on revenue targets and lowered its guidance. This comes as Gannett is awaiting shareholder approval to be acquired by New Media Investment Group for nearly $1.5 billion, and that would combine the 2 largest newspaper chains in the country. Gannett shares were down a fraction to $10.71.
After the bell, online consignment company The RealReal reported better than expected results thanks to strength in its gross merchandise volume. Shares were initially volatile in the after hours on that news. Today, they closed the regular session down more than 5% to $21.73. Also after the bell, Marriott posted mixed results, missing on Wall Street's earnings estimates, but it did top revenue expectations. The hotel operator said that it was impacted by those mass protests in Hong Kong and by unfavorable foreign exchange markets. Shares were initially volatile, and after hours, they closed the regular session up more than 1.5% to 130.16. And finally, Uber missed analysts' expectations for monthly active users, but the ride-sharing company did post a beat in quarterly revenue. But its losses for the quarter topped $1 billion, and shares initially fell following the after-hour bell news tonight. They closed the regular session down a fraction at 31.08. Coming up, turbocharged earnings, a look inside Ferrari's secret profit engine. Apple is spending $2.5 billion to help address the affordable housing crisis underway in Silicon Valley. In a blog post, CEO Tim Cook said that his company has a civic responsibility to ensure that the region remains a vibrant community. California Governor Gavin Newsom has said that building more affordable homes is one way to address the sky-high cost of housing, something that has contributed to the spike in homelessness in that area as well.
Saudi Arabia's state-owned oil producer announced plans over the weekend to go public. The IPO of Saudi Aramco would be the largest initial stock offering ever. Trading is expected to begin next month on the Saudi Stock Exchange. And while few details were available, bankers have told the Saudi government that investors may value the company at about $1.5 trillion.
Finally tonight, Ferrari said today that its earnings are racing ahead. The luxury automaker reported a solid quarter. It topped profit and revenue estimates. It also raised its full-year outlook, thanks to an increase in vehicle shipments. And that helped lift that stock by more than 5% today. However, the legendary sports car maker is also making money from an operation that few people know about. Here's Robert Frank.
For today's wealthy, buying a Ferrari isn't quite special enough. They want a Ferrari that's made just for them, which is why Ferrari's profits are soaring with help from its customization program. Ferrari's stock racing higher today on the back of strong earnings and profit margins of 34%, numbers more typical of luxury handbag makers rather than car companies. A big driver was its tailor-made program, where customers can pay an extra $100,000 or more to customize their rides. They spend half a day in a special Ferrari design center with a personal designer picking out their own fabrics, wheel treatments, metal finishes, stitching threads, brake calipers, and shifting paddles. They can even have their names inscribed in the interior. and create one-of-a-kind paint colors, which are then displayed on Ferrari's famous color wall.
Customization for us is extremely important in order to increase the customer satisfaction. It's a way to engage clients and having them happy and coming back again.
Now, wealth alone can't get you a tailor-made Ferrari. You have to apply and get accepted. Ferrari only makes about 200 tailor-made cars a year out of a total production of about 9,000. The company won't say what qualifications are, but it typically goes to customers who have already purchased multiple Ferraris. Ferrari had 2 tailor-made studios, one in Maranello, Italy, where Ferrari is based, and the other in Shanghai, but they were so overbooked that they just opened a third in Manhattan, where we got an exclusive tour. I tried my hand at creating a customized version of their latest model, the 812 GTS, which starts at $398,000. By the time I added a special blue paint, racing stripe, red seats, and a special badge with my name inscribed, the price was $500,000. What have you ever said no to?
Oh, several times we had to say no. Let's say that if the color is a pink color with cartoons on the shield of the car, on the bonnet of the car, is something that we don't want to do.
Proof that at least when it comes to Ferraris, money can't always buy you everything. For Nightly Business Report, I'm Robert Frank.
Before we go, here's a look at the day's numbers on Wall Street. A record close. The Dow was up 114 points. NASDAQ added 46. S&P 500 gained 11. And that is Nightly Business Report for tonight. I'm Sue Herrera. Welcome back.
Thank you. It's nice to be back. I'm Bill Griffith. Have a great evening. See you tomorrow.